Hello and welcome to day 3 of our investor conference. My name is Eric Levinson, Head of Business Development here at VinaCapital. And we're very pleased to have day 3. Now, if you missed sessions 1 and sessions 2, session 1 was really an overview of the macroeconomic environment in Vietnam. We heard from our senior management at VinaCapital, economists from HSBC, and Michael Kokolari, our chief economist. On day 2, we heard from Andy Ho and Con Vu, Chief Investment Officer and Portfolio Manager of VOF, the VinaCapital Opportunity Fund. Both of those sessions are now on our website, www.vinacapital.com. Now, here we are on day 3. We're going to feature our traditional investment platform, both equities and fixed income. We're going to hear from my colleague Ismail Pillay, our head of research, as well as our head of investments, Tu Nguyen, and 2 of our portfolio managers on the equity side. With that, Ismail, I'll turn it over to you. First question is, well, 2020 has been kind of an interesting year, as you can imagine. Can you give us a quick recap of the stock market in Vietnam this year? And I guess, how different has it been from what you expected in January?
At the start of the year, the market, including ourselves, was quite bullish, and the outlook for the VNI had brokers pegging anywhere from 1,000 to 1,250 as far as index targets are concerned. No one, though, was anticipating the black swan event in the form of COVID, and that in itself led to a very sharp correction in the first quarter. But unprecedented fiscal and monetary stimulus, not just in Vietnam, but globally, led to a 30+% rise again in the second quarter. And for that matter, thereafter, we did see some range trading until, of course, the July outbreak. But the one thing to note is the locals' confidence in the government as well as the market actually led to a quick ascent. The correction that we saw post-outbreak was very shallow. And in that regard, we've been seeing a run that still continues to this day.
And, you know, it's interesting. We talked about the market, but if you think about economic activity and kind of what we see in the streets, are you seeing kind of a return to normalcy? And as a research guy, what do you think that means?
Well, certainly when you walk out there, traffic is all around you. It's taking me longer to get to the office and back home. And you look down the streets, the restaurants, the malls, the bars, especially the bars, they're quite full. And in that regard, I think this is actually captured in a lot of data points, such as the Google mobility numbers, the retail sales figure, you look at the foot traffic, and even in the airport. You know, we took a flight to Hanoi, and the airport was packed.
Interesting. So, you know, as you think about it, the market's now almost flat, you know, if you think about it. What sectors have done well in this environment, and is that surprising?
Well, even before we get to the sector, the fact of the matter is the Vietnam index has been the best performing market in Southeast Asia. And we're almost flat year to date. And I think part of the appeal behind that is the fact that we're not seeing a sharp contraction in earnings as we are elsewhere in the region. But as far as specific sectors, the materials have actually done quite well. And I think you can say that there's a little bit of an overarching infrastructure theme that goes behind that. But at the same time, they've been posting relatively good numbers, strong profit guidance, and you put it all together, and that's probably leading to that outperformance.
Now, you know, in the last session with the VOF team, we talked about Hoa Phat. Are there other stocks in that sector that are doing really well, or is it really driven by that one particular company?
Well, Hoa Phat is a big one in itself, but the plastics companies, anything materials, I mean, for the most part, people are just jumping the guns as far as these stocks or these names are concerned.
And so I guess that, you know, not surprisingly, what's the best performance? Then it's like, okay, well, what sectors have the best earnings? And it almost, you know, goes in lockstep.
Sure. I mean, for the most part, earnings leads the markets on a longer term basis. And we saw that in the first half. We haven't seen the third quarter numbers yet. We're just starting to see them come around. But for the most part, we have high expectations still for materials, financials, and even real estate for that matter.
Now, you know, it's interesting. So the market's basically flat. Earnings for a lot of the sectors, a lot of the companies have been very good. What about valuations?
Mm-hmm. The valuations of Vietnam is never going to be cheap. Not now. For the most part, people buy Vietnam on growth. Officially, we're roughly around 17 times right now, and historically, the mean for forward estimates, it's roughly around 13 times. This is not a value play. This is about growth, and in that matter, I think Vietnam does offer a lot of that.
But if you think about it, you're almost comparing Vietnam versus itself, but how does it rank versus its regional peers?
Yeah, I mean, one measure you can kind of look at in terms of market interest is the fact that the average daily turnover in Vietnam has now gone up to over $200 million per day. We are well above the Philippines, and if you put the 3 bourses together, we're probably above Malaysia itself and knocking on Indonesia's level. That itself probably reflects a strong investor interest, but I gotta say that a lot of the interest at the moment is being driven by the locals. We continue to see foreign outflows. This is not unusual in the sense that the rest of ASEAN is seeing the same type of foreign outflow, but the amount that's leaving Vietnam is quite paltry compared to what we see elsewhere in Southeast Asia.
You know, and it's interesting because as we think about not only the equity volume, but there were two large investments from institutional investors, KKR and I believe a sovereign wealth fund, and I think that should show a continued confidence from the largest investors in the world in the future of Vietnam, and to buy during a pandemic, I think shows very, very well about outsiders' view of what's going on here. Do you agree?
I certainly do. I mean, one of the biggest appeal of Vietnam is the fact on the long-term game, the structural and secular appeal is much higher than what we find elsewhere in Asia. For the most part, you can say North Asia has already seen their day in the sun. Southeast Asia, Indonesia, Philippines, they still have opportunities, but nothing like Vietnam in itself. And for the long game, I think there's going to be the big pull for investors. Interesting.
So now you touched on earnings, and obviously earnings have been, in pockets very, very strong. How does Vietnam stack up, again, via its ASEAN peers from an earnings perspective, and what is your view of the next 12 to 18 months?
Sure. I mean, right now, if you look at the consensus figures, we're looking at roughly around 12% contraction year on year. That is a far cry from the average 20% we're seeing for ASEAN, as deep as around 35 to 40% at one point in time in some of these Southeast Asian markets. So in relative terms, Vietnam is doing relatively well.
And it's funny, again, in the earlier sessions, which you may have joined, part of the success is because of how well the Vietnam government and really the population managed COVID. Really only a kind of a 1 week or one time 4 week lockdown. The rest, it's been almost business as usual, face masks and temperature checks. But realistically, business is going on, and I think that's been very helpful. Having said that, nothing is risk-free. When you think of the markets and when you're looking at companies, what are the risks that you're looking at today?
It's actually interesting because you can almost say that maybe there's a little bit of a calm before the potential storm. But that storm is not going to come from within. We're actually more concerned about exogenous factors. And we're concerned about the same 4 factors that we've identified that global investors are probably looking at. This includes the COVID situation. The second one would be in terms of global contraction or global growth and recovery. Third one would be geopolitical noise. And the fourth one is corporate earnings. Now, all these 4 points have greater relevance as far as I'm concerned for the outside market. But there is, of course, a play in Vietnam. Now, for COVID, we've done a fantastic job in addressing that, and we have high confidence that they'll continue to do so. In terms of the contraction that the world is seeing, 4.3% according to IMF, we're still going to show growth, 1.6 to 2.5%. As far as geopolitical noise is concerned, the biggest factor for us directly might be about the South China Sea situation. But certainly the saber rattling that's going on between the US and China is something that we're going to have to be aware of. And finally, in terms of corporate earnings, as I highlighted earlier, we're not seeing as sharp of a contraction as we saw elsewhere in the region. And for that matter, I think we're going to see relatively attractive numbers as far as the third and fourth quarter is concerned relative to the second quarter.
Okay. So, you've kind of outlined what the risks are, and, mostly outside of Vietnam, but it's a globally kind of interconnected economy, so we can't say that it doesn't impact Vietnam. What else can we look forward to and look ahead to in the next year?
Well, one of the things that people have focused on is the MSCI upgrade of Kuwait, which will mean that Vietnam will have a higher weighting in the frontier markets.
So Kuwait moving from frontier to emerging.
That's right, yeah. And at the moment, I think Vietnam has roughly 17 to 18% weighting. They could move up to roughly 28 to 30, depending on who you're talking to. That could be something that people are anticipating. Another one that we're looking at is perhaps the support in terms of government's fiscal stimulus packages. We do continue to see some money being released. Not much, we don't need that much, but certainly FDI would be the other flow that we think would be quite supportive for the market.
Yeah, and it's interesting for those of you that have been reading about what's going on in Vietnam. If people are able to get in, which is very, very difficult, there's a 14-day quarantine. And recently the government's enacted a new policy for business people that aren't long-term residents, for them to just come in and only have a quarantine for 5 days. And I think a lot of that is due to really trying to help stimulate FDI.
Certainly. I think Michael Kalari has highlighted the whole point about how it is going to be an ongoing theme for several years. And in fact, it might broaden even further But I'll let you guys discuss that with Mike.
Yeah, no, it's terrific. And actually, Michael does mention that in his day one comments. One of the things that foreign investors always ask, and so we actually touch on it each day, is currency. So if you're living outside of Vietnam, currency risk is always an issue. The stocks can go up, but what happens with the VND ultimately, is going to be a huge impact. What's your view on the dong, and what's your view in terms of its stability?
Well, going back to Mike's view, he has been thinking that it's going to be relatively stable. There are calls that perhaps it's undervalued to some degree. But if you look at the VND over the past couple of years, it's been relatively steady relative to the US dollar, I should say. Yeah. I think a lot of aspect behind that is the fact that we have a very strong trade surplus, a record 8% now, yeah. And our Forex reserves is now hitting around 93 billion, which is close to about 5 months worth of import cover. We're actually thinking that could hit as much as 100 billion by the end of this year. So I think for the VND, it's less of a concern for us. It's a valid concern for emerging market and frontier market investors, but VND is very stable.
Yeah, interesting. And so, that gets us to kind of, again, a more forward-looking comment. What sectors or themes are you really focusing on that you'd recommend to people that are viewing this today?
Sure. We've always said that investors should be running with several concurrent themes at any one given time. And in that regard, our team actually is running with roughly half a dozen themes at the moment. But, to cut to the story, the themes that we are running with is actually including domestic recovery plays, infrastructure, defensibles, basically industry-leading franchises and business with good returns and growth, beneficiaries of a low-rate environment, FDI plays, of course, and to some degree, a little bit of an event play consolidation.
Oh, interesting. Now, it sounds like a lot of work. I'm hoping you're not doing all of that by yourself, and I know you're not because I know your team. But can you introduce your team and think about what it looks like and how it's grown over the last year?
We're very fortunate to be working with a very big team, and it was a reflection of VinaCapital's commitment to research. The fact of the matter is we're just trying to bring some regional best practice, international standards to our processes. And in that regard, we do have a dozen people assigned to research, including 2 data analysts, 1 ESG researcher, and 2 economists. We do cover the highest number of stocks, I believe, under coverage in the market, equivalent to about 98% of wholesale market cap. If you just want to measure it in terms of the wholesale listed companies, we cover about 84% of that market cap. We tend to focus on thought leadership, sector, and as well as thematics. And in that regard, I do believe that we do have a relatively deep bench.
Well, Ismail, thank you so much for your comments. We're now going to bring up our head of investments, Tu Nguyen. Tu, please join us.
Thank you.
So, Tu, if you look at our investment platform, it's actually quite diverse with solutions for investors all over the world in multiple asset classes. Can you think about the platform, describe what we're really trying to deliver to our clients?
Thank you, Eric. We understand that the investors can have very different needs. So over the last 8 years, we've put together our investment expertise and our product knowledge to create a broad range of open-ended fund products to cater to both domestic and international investors that have an investment need in both equity and fixed income. Our funds are mostly actively managed, but we also recently launched an ETF to cater to a group of investors who would simply want a passive but highly liquid beta exposure to the market. And then for the investors with very unique mandates, we offer them tailor-made solutions. We currently manage several segregated mandates for domestic and international financial institutions.
Well, it sounds like a broad range of solutions. Can you tell us about the team who actually is responsible for managing all of these products?
We have 5 portfolio managers with a total of 60 years of investment experience. We are all local Vietnamese people with overseas training and some with international investment experience as well. We are supported by 3 assistant portfolio managers and a team of research that's headed by Ismail.
Excellent. So for the folks who may know VinaCapital very well, they're probably familiar with kind of how we do what we do, but there may be some people that have dialed in or I guess logged in, I always get that wrong. What is the investment philosophy, and maybe just limit that to the equity portion of our business?
Being 100% focused on Vietnam, we are growth-oriented investors who seek to capture and participate in Vietnam's structural economic growth for our clients. We do this through our fundamentals-based bottom-up stock selection, leveraging our proprietary research team and our dedicated investment team. We also applied a top-down overlay of macro and policy views aimed at identifying winning industries and themes. We have an absolute return mentality that's reflected across stock selection, portfolio construction, and risk management. And last but not least, we are high conviction investors who often take large, long-term, off-benchmark bets in concentrated portfolios. Our portfolios typically have 20 to 30 positions, with the top 10 accounting for over 50%. And the portfolios are index agnostic, with active shares typically above 60%.
Well, thank you for describing the philosophy. And I think it's important, as you're investing with a firm, to really understand what we're trying to achieve. And I think we have a very clear investment philosophy, which leads to the next question, which is about process. So we now know what you believe in. Now, how do you actually implement that and execute that across different portfolios?
Our investment process is a continuous process, from screening to stock analysis and valuation, followed by investment decision, portfolio construction, and monitoring, which then loops back to screening, because we are constantly looking for new opportunities. So in screening, we start with the broad universe of over 1,600 companies that are listed across the 3 exchanges, and apply our filters that relate to size, liquidity, fundamentals, and ESG. That will reduce the universe to about 100 companies that we need to deep dive research and do the analysis and valuation on. And we do this with the help of the research team, with emphasis on on-site due diligence, which means meeting with the management of the company and visiting the facilities, and independent checks, which means that besides the management of the company, we also need to talk to other stakeholders of the company, such as the customers, the competitors, the distributors, and so on. We take valuations very seriously, employing multiple valuation methods and with sensitivity analysis. And we look for growth in companies, but not only that, we look for sustainability in the top line and bottom line growth that is backed by strong recurring operating cash flows from the company's core businesses. We also place a lot of emphasis on the company's corporate governance. And then in the next step is the portfolio construction. We generally let our conviction level guide our stock weight, taking into account things like beta, correlation, and the mandate restrictions. Throughout the process, we must be very disciplined, but even more so with regards to the exit decisions. We normally only exit a stock when it has reached our target price, or when there have been fundamental changes in the outlook or corporate governance.
I appreciate that and the detailed answer. What I think is very important is a lot of times people will talk about being high conviction investors, and then you look at their position sizes and they're actually not. And so what's terrific about our portfolios is that we truly do put the allocation weights with where we're highest conviction. Now, you talked about this, and we're going to meet actually a couple of our portfolio managers a little bit later. Do we have a star system? How does it work with the PMs? And is it a team approach? Is it a single manager approach?
No, there is no star system. We take a team approach that encourages all of our investment professionals to excel. We do share and discuss investment ideas amongst the team members on a daily basis, and then with the research team at least on a weekly basis. But at the same time, we do not force people to come to a consensus, nor do we have one single portfolio manager that override others. So the PMs are allowed to express their individual style, but within the parameters that are dictated by the fund's mandate and restrictions.
So it sounds like the PMs have a lot of freedom. Are there any specific guardrails, restrictions that we have on the investments overall?
While being mindful of risks, we do not impose additional internal restrictions on the investment team that may inhibit them from generating alpha. So the portfolio managers make their own decisions, but ultimately they are also accountable for the fund's performance. They also have to report to the Investment Advisory Committee on a weekly basis.
Terrific. So, we have 2 funds that are geared towards investors outside of Vietnam. One of them is VVF, the other one is VAF. Should we look at these, or more importantly, should the audience look at these the same way, or are they different?
They are certainly different. VVF, which is a UCITS-compliant fund, provides investors with a liquid exposure to growth at reasonable prices stocks, whereas VAF, which is a Cayman Island open-ended fund, is the only offshore fund that provides investors with unencumbered access to the foreign ownership restriction stocks. And it also provides investors with selective exposure to the high-growth small and mid-cap companies. And because of its lower liquidity requirements, its mandate also allows it to have exposure to the pre-IPO stocks or special situation stock. In other words, because of this illiquidity premium, we would expect VAF to generate higher return over the long run. In terms of similarities, though, the two funds are both actively managed with concentrated portfolios and high active share. So VVF has an active share of 60%, whereas VAF has an active share of over 70%.
So, one thing you mentioned there, and it's certainly a question that I had, and I think it would be great for the folks online, is the definition of large, mid, and small. Because certainly outside of Vietnam, if you're in the U.S. or Europe, you're looking at a 10 billion plus, 2 billion to 10 billion, below 2 billion in market cap, that's U.S. What are the metrics that Vietnam uses, and then does VinaCapital kind of use the same metric as well?
Right. Actually, in Vietnam, there are no formal definitions of large, small, and mid caps. For our purpose, we've defined the buckets in a way that is more relatable to the international investors. And so our large caps are companies that have market capitalization of over $2 billion US. Mid caps are companies between $500 million to $2 billion US. And small cap companies are whatever is left, which is basically all companies that have market cap below 500 million. If you look at the market at the moment, it's dominated by large caps with 65%, and then mid caps account for about 12%, and small caps only 23%.
That's terrific, and I think it is really important. So it's kind of a relative ranking within Vietnam in terms of small, mid, and large. One of the terms you mentioned, and we've highlighted this a little bit in the first two sessions, is FOL, which stands for Foreign Ownership Limits. So what exactly does, FOL mean? Why does it exist? And then maybe some forward-looking comments on the intentions by the regulators to adjust it to make it better for investors and for companies going forward.
FOL has existed in Vietnam since the first day of the stock market, which was in the year 2000. And I believe the reason was because the market at that time was small, and the government wanted to maintain a form of control over the ownership of the listed companies because their intention was to privatize and then list the SOEs. And this limit has been relaxed over time, first to 30%, and then to 49% for sectors other than banks and aviation. The regulator, which is the State Securities Commission, has done a few steps to relax these limits because their intention is to actually get rid of FOL so that we can be reclassified by MSCI as emerging markets. However, they've met with administrative and technical challenges. So in 2015, they actually issued a decree to allow listed companies to determine their own foreign restriction. However, since then, only 47 companies have actually done so and lifted the foreign ownership limits of their companies above the 49%. This is a drop in the sea compared to the 1,600 companies that we have that are listed. So it shows that, besides the technical and administrative challenge, it's also the lack of will from the part of the listed companies to do that. The solution that they are proposing at the moment that has been spelled out in the new securities law, which is going to be effective 1st of January of 2021, is NVDR, or non-voting depository receipts. That's modeled after the Thai market. But again, this is not going to happen until 2022.
Interesting. And I think in terms of conversations we've had and I've had with other investors is the foreign ownership limit was really more about control than exposure, meaning the SSC or the government was less concerned about investors having exposure to Vietnam. It was more about controlling interest in the companies. And so certainly understanding that certain industries, banks and aviation would still be protected, but an NVDR or something like that should open that up. Now, as a follow-up question, as a manager here in Vietnam, do we have any advantages in requiring FOL shares that are different than a manager outside of Vietnam?
I think we have both the investment experience as well as the product experience. So we've created a product that's called VAF that we've mentioned that circumvents that issue. VAF provides investors with free access to the foreign ownership limit stocks without having to pay a foreign premium. And it does it through the exposure to VESAF, which is our local open-ended fund that's actively managed by the same portfolio manager. So basically, this is a good way for us to access the FOL stocks without having to pay the foreign premium, which typically ranges from 7% to 40% in some cases. And also because VSAF is an actively managed fund, it's different and it's more advantageous than exposure through an FOL ETF in that sense. VAF's exposure to the FOL stocks currently stands at over 50%. And for another fund that we manage that is also available to foreign investors called VVF, we do not enjoy the same access advantage. So we have to go to the market and acquire these shares by ourselves directly. But because of our vast network and our active approach, we've managed to acquire a third of the fund in this FOL stocks with very minimal premium. So when we buy, we normally do not pay more than 7% premium for the stocks. But when we sell, we actually have achieved a lot higher premium, in some cases up to 45%.
So besides NVDR, we're going to go back to the market here. Besides NVDR, are there some other new developments in the market that we can expect in the future that will either change the liquidity profile or just make it easier to invest?
I think within the next 2 years, there are a couple of developments that will help make the market both bigger and deeper, as well as with improved liquidity. One of which is we expect the return of state divestments and SOE's privatization. SOE meaning state-owned enterprises. Those activities were quite busy during the period of 2015 to the early part of 2018 because it was a good market then. But since then, it's been dried up. And we know why. Next year, after we completed our domestic election, we think that the market will be ready for those activities again. And also, I think that next year the market will be in a better place as well. The government is also very motivated to raise capital to fund their public spending needs. And there's already a lineup of large companies that the government wants to privatize, namely Mobifone, Agribank, Vietnam Post, and Saigon Trading. Those would total, the IPO size would total over $6 billion US. And then there's a lineup of companies that the government wants to divest their stake in, and those companies are already listed, like Vietcombank, Vietnam Airlines, and the Airport Corporation, and so on. And this also bring about another $13 billion US for the government. And all of that, once completed, will surely add to size and liquidity of the market. The other development is the the pension regulation that the government is working on amongst the several ministries. And this attempts to resolve the current issue that our state pension is inadequate. So with that, we hope that we will see many private pension schemes being launched by asset managers like ourselves. In fact, we're applying for our license to manage a pension, the private pension right now. So the significance of that is that it actually adds to the market a breadth of institutional local investors. Because the market currently, 85% of the trading of the market currently is driven by the individual investors, who are typically described as traders rather than investors. So with the addition of the institutional investors, we hope that the market will be less volatile. And then last but not least, Msci Activities. So Msci recently announced that they've upgraded Kuwait from frontier to emerging markets, therefore lifting Vietnam's weight within the frontier index quite significantly, actually more than doubling the current weight of Vietnam. But what is more to hope in that is that in the next 2 years, after NVDR is implemented, we think that Msci will upgrade Vietnam from frontier to emerging markets, and I think that would bring in an influx of inflow to the local market, because the foreigners who want to benchmark against the new the EM index would have to buy Vietnam there.
Is that really, do you think that's the EM upgrade really predicated on solving the FOL or the NVDR issue?
Yes, yes. I think it's widely known that there are two things that are preventing Vietnam from being upgraded. One is the FOL issue, and the other one is clearing and settlement. Clearing and settlement is more a technical issue, and it's basically an issue within the the State Securities Commission, the exchanges, and the market players. FOL is more complicated. That's why we discussed it earlier. Yeah. So I think all of those two issues would be resolved within the next 2 years.
Well, that's terrific. Well, Tu, thank you so much for giving us a great overview of the platform, of the philosophy and the process, as well as an introduction to the products. Now we're going to invite Tao Ong, our portfolio manager for VVF, to join us. So Tao, please come here. We're going to have a couple of questions about VVF. So thank you so much for joining us. First question for you, and this is a very much of a self-serving question, so I apologize. VVF has outperformed the market significantly for the first 9 months of the year. Let's just start with an easy, fun one. What led to that outperformance?
Thanks, Eric. The fund recorded a positive return of 0.3% for the first 9 months of this year, while the index was almost down 6% at September end. Our performance boiled down to two things. First, the process. We have a rigorous process in place. In a year like 2020, which is obviously affected by COVID-19, we continuously monitor our portfolio because it requires us to be vigilant and fast-moving. We look at the earning prospect. We ask ourselves what kind of companies will look through the other side to be stronger. And we talk frequently to the management, and then we take active bet when we have high conviction. Therefore, we could make timely adjustment on the portfolio. Secondly, discipline. We didn't trade based on our emotions. Though we did some repositioning, we didn't take part in any panic sell-off in March. As a result, we were able to pick up some good stock on the cheap, and they have performed well since then.
Okay. And so, kind of a follow-up question. What were the top contributors this year, and how did that impact the portfolio?
We are index agnostic, so at the sector level, our significant underweight in real estate this year helped our relative performance because the sector was down 8%. At the stock level, our most significant contributors included Hoa Phát Group, the largest steel maker in Vietnam, Viettel Post, the package delivery company specialized in e-commerce, and VinaCapital's, the port operator in the north of Vietnam. These are the companies with positive earning prospects, attractive valuation, and benefiting from accelerating sales and margin improvement. So in fact, during the market sell-off, we increased weight in these companies.
And I think it's very good to hear in day one and day two, we kind of gave the macro environment, and a couple of the big themes were how actually, even in this economy, global pandemic, Vietnam has actually increased their exports. And so for two of your top holdings to be I guess the ports, which should certainly be a beneficiary of the export of stay-at-home goods, and then even domestically, the increase in overall delivery. So it's nice to see that your portfolio is taking advantage of those themes. Now, as we look at the year-to-date performance, which is terrific, a lot of people, investors, when they're deciding to hire managers, tend to focus more on the 3-year number. 3-year number is a little bit different. Can you walk us through the last 3 years and help us understand what's going on with performance?
Well, the last 3 years were quite interesting in the sense that the market is a liquidity-driven market due to an influx of foreign inflow, as you have seen in 2017 to 2019. The chase for liquidity caused the stock prices as well as the valuation of large cap companies to surge, while companies with full foreign room, like the one we have in our portfolio, such as FPT, despite their strong fundamentals and good growth, didn't get to ride this wave. This led to a divergence in valuation between large cap stocks and mid cap stocks, which is our focus. So if you look at the performance during the past 3 years, we might underperform in a certain period of strong liquidity. But if you look at longer periods, such as 5 years or since inception, which is slightly over 5 years, we outperform because we loyal to our growth as reasonable price strategy. And we aim to outperform the index in a longer period or full market cycle with lower volatility, as we are being mindful of risk.
Well, thank you. In fact, it makes me think back to my introduction of you, which was frankly brief and too brief, because Tao's actually been managing the portfolio since inception, which was July 15th of 2015. So the full track record of the fund is 100% yours. And so we look at the year-to-date, outperforming, the 3-year a little bit under, but the 5-year in inception is outperforming. And it's interesting, if you think about that 3-year number, it really mirrors what's gone on in the rest of the world, where we've had this liquidity-driven market, kind of that active-passive debate. And if you're looking for somebody that actually picks good stocks, isn't just forced to buy large, it's a great opportunity. So I appreciate that detailed explanation. So we talked about FOL stocks a little bit. What is VVF's exposure to foreign ownership limit stocks?
Well, around 35% at the moment. It's worth noting that if we sell those stocks at current market premium, we can add a further 3 to 4 percentage points to the fund's performance. Okay.
So as the naive investor and shareholder might say, Todd, that's terrific, but why wouldn't you just sell that and kind of get 4% in the NAV tomorrow morning?
Good questions. We will definitely sell those stocks if we think their fundamentals has changed or the valuation look expensive. But now, for the stock we own in the portfolio, we think that they are quality names with attractive valuation and circular growth. And we would like to keep that stocks in the portfolio for long-term capital appreciation.
Okay, so I think that's terrific. And I really appreciate the fact that you're thinking long-term, because oftentimes people want to get seduced by I think I would take the 4%, but I think it's important a professional investor is doing the right thing for shareholders. So as we think about that, how are you positioning the fund today? And importantly, meaning think about the attributes that you look for when building the portfolio. What attributes are you looking for in the stocks that you're selecting?
We position our portfolio among the 3 buckets. The first is core holdings, the second is cyclical, and the third is opportunistic. For our core holdings, because we are navigating this turbulent time, so we are looking for the companies that can generate good cash flow. We look for the companies that have positive tailwinds. And as a daily trading fund, we also want the stock to be liquid. So okay, that's the attributes we look for our core holdings.
And how about for cyclical?
For cyclical space, we like the companies that are ready for the upturns in sales cycle, as well as they can benefit from favorable raw material cycle.
Okay, so kind of that cyclical is kind of the same way that people think about cyclicals all around the world. And lastly, how about opportunistic?
Well, for opportunistic space, we like company with M&A catalyst, or sorry, in Vietnam, it could be a state divestment catalyst.
So thank you very much for that description, kind of core, cyclical, opportunistic. I think it's a great way to not only manage the portfolio, but as a marketing person, a good way for me to talk about it. Can you tell us about one of your core holdings, and that way we kind of have a better understanding of what exactly you're looking for?
Okay, one of our core holdings is Hoa Phat Group, the largest steel maker in Vietnam. It's also our top contributors to the performance this year. The fund has owned the stock for some time, but this year we increased the weight of the stock from 3% at the early of this year to 6% in Q2. The company reported 57% earnings growth for the first 9 months of this year, far exceeding the market consensus. Volume growth were also very strong at 26% year on year. The company expanded market share to 32% this year from just 26% a year ago. We believe the company can continue to deliver upside potential due to its strong fundamentals and as well as can benefit from the acceleration of public spending.
Terrific. And we've heard about Hua Fat a couple of times, so certainly, I think one of the market leaders in the country. So we've talked about a core holding, a more established holding. How about a kind of a new investment, something that you've added to the portfolio recently?
We made several new investments this year. One of them is Goodman Plastic. It's a company that not many people know about, especially foreign investors. We follow the company for a long time and regularly talk to the management team. Here's why we like the company. It is the largest plastic pipe producer in Vietnam, holding 24% market share. It is a small cap company, $200 million in market cap. It has $40 million in cash balance and no debt at all. During the market sell-off, the stock price went down to a depressed level of 3 times EV/EBITDA, well below its 5-year historical trading. So we took the advantage to add the stock in the portfolio because the fundamental of the company is still intact. It delivered 7% sales growth, while the earnings growth is even higher at 25% for the first 9 months of this year. And the stock price had returned 40% since we added.
Sounds pretty good.
Thank you.
So that's terrific in terms of kind of the backward looking. What about in the future? Are you making any changes to the portfolio today based on kind of the recent run up? And if so, as you think about 2021, what kind of changes or adjustments to the portfolio are you making?
We continue to center our core holdings among the 3 themes: urbanization, digitalization, and domestic consumption. As we are approaching the end of 2020, we will focus more on how the company will look through 2021. Therefore, in recent months, we started to add some position in sectors that we think can recover well after the pandemic, in banking, industrials, and infrastructure related, because we think the acceleration in public spending in coming years can benefit.
Well, terrific. Well, that has been fantastic. For folks that want to ask questions, we're going to bring up another PM, but then we'll have a Q&A with everybody. So with that, I'm going to introduce Phung. Phung is a portfolio manager for our VAF portfolio. And so we're going to have a quick introduction to VAF. So Tao, thank you so much.
Thank you.
So Phung, in her earlier comments, Tu mentioned the unique structure of VAF and how that is able to get access to the foreign ownership stocks, which is terrific. I, of course, will start the conversation with the same question I asked Tao, which is, you're amazing. Your performance this year has been, I think, the second best of all the Vietnam offshore funds in the marketplace. So in a humble way, how were you able to achieve that?
Thanks, Eric. The VAF returned a positive of 2.5% in the first 9 months, while the broad market still declined 6%. So we actually restructured the portfolio very early this year. So we buy in the selective small and mid-cap stocks very cheaply during the market sell down. And during the turbulence, we stay close to the fund's mandate, which is the full room stocks and the mid and small cap stocks. With a unique structure, VAF get an easy access to the full room stocks without paying premium. So the portfolio currently has 10 full room names with average return of 15% year to date. While all the foreign room stock in the market have a return of 9%, which is lower.
All right, well, thank you so much for the explanation on the outperformance. Now, since it's easy or easier for VAF to buy the foreign FOL stocks, I'm assuming that VAF has a high exposure to FOL stocks. What is the current exposure?
VAF have an exposure of 50% of the full room stocks via the holding in VSAF. But with an active managed fund, we do not buy all the full room stocks in the market. But similar to VVF, we have a very disciplined in investment criteria and has been very selective in stock picking, and that helped the performance of the fund. And we also think that the VSAF fund is an active fund and is more meaningful than investment through a passive structure with the same purpose, because we can be very selective in the full room stocks and also purposeful in our weight decisions.
Okay. So as you think about it, 2020 has been a very challenging year. The first quarter was particularly challenging. Can you speak about some of the adjustments that you made in the beginning of the year that really set you up for the performance you're having?
We're very cautious from the early on. Right after the COVID-19 emerging in China, we thought that it would slow down the economy and then make the discretionary spending decrease. So we actively trimmed down the vulnerable sectors, such as retail sectors, by half of their weight in our portfolio in early March before the market sell off. So to recall to you, the retail sectors recorded the worst return in March with a decline of 43% on average. And the retail stocks are also the worst performers among the FOL universe year to date.
Okay. And are there any other actions that you took that are kind of worth mentioning?
So at the beginning of the COVID-19, we could not predict how long the outbreak would last or how much the impact of it to the economy, but we know that the stock market will be very volatile. So that's why we repositioned our portfolio towards the defensive place, such as the exposure into the utilities and healthcare sectors. And actually, we accumulated those holdings at very attractive valuation at that time.
So what's interesting is we've talked about VAF a little bit. It sounds like within the fund, obviously the exposure to the local fund, VSAF, VESAF, it has kind of a dual mandate, the full room FOL stocks, but also exposure to small and mid. Can you talk a bit about your small and mid cap exposure?
VAF currently has over 60% exposure in the small mid cap stocks. This is actually an increase of the weight compared to the end of 2019. So we made some of the new small and mid cap investment during this year, mainly in materials, utility, and healthcare sectors, which all performed very well. Because at that time, our main focus was aimed at the companies with positive earnings growth for this year, and also they had strong cash flow to maintain the cash dividend payment policy. And these holdings return an average of 20 to 30% since our purchase.
Okay, so one of the things that you and I talked about, and likely folks that are dialed in are kind of either curious about or concerned about volatility. I know for investors in the U.S. or Europe, small and mid-cap stocks have much higher volatility than large-cap stocks. Is that the same in Vietnam?
No, because the analysis of our in-house analysis of the last 4-year trading data has shows that the small mid-cap stocks are not much more volatile than the large-cap stocks. So our in-house research team is able to support us in finding the undervalued small and mid-cap stocks, which are not widely covered by the sell-side research. But while there are more than 100 small mid-cap stocks in the market, we actually just buy around 20 to 25 names in our portfolio. So it means that we actually just select the small mid-cap stocks with the same volatility with the large cap stocks, but much more growth potentials.
Okay, that's terrific. So if you think about that, and obviously you made some additions this year, can you talk about the repositioning and talk about a recent investment you made and why, and maybe focus on a small mid-cap stock to kind of continue the conversation?
Can I talk about the BWE,
sure.
Small cap stocks? Actually, we bought this stock last year, but decided to increase the weight significantly during the market sell-off as the valuation became very attractive. We also is one of the earliest investor in the stocks, and the stocks is the second largest contributor to the fund's performance this year. In terms of the business, this company supplies clean water and waste treatment services, and I believe it's a direct beneficiary of the FDI inflow and the production relocation trend that was mentioned earlier by our chief economist on the head of research.
Okay. So, you know, in the conversation we had with Tu in the beginning, we talked about Vietnam as a growth market and VinaCapital as a growth investor. We're talking about growth, and then you give me an example of a water company. So is a water company in Vietnam a defensive stock, or is it a growth stock?
Yeah, I know, because it's water business is kind of sound as a defensive, which is very good for our fund during the market downturn. But the company is also a growth stock. It has a monopoly position in the major manufacturing hub of Vietnam, and it can achieve a growth rate of 15% in sales volume in the last 5 years annually. And we believe it continue to deliver the same or just slightly lower growth in the next a few years, because of the high water demand from both households and industrial players in Vietnam due to the rapid urbanization and also very strong manufacturing activities of Vietnam.
And I think it's a great example of where Vietnam differs from a lot of the world, certainly the developed world, where a water company is a utility. The growth rate is basically zero because everyone already has water and there aren't industrial parks being built every day and new manufacturing hubs. So as we think about Vietnam, it's natural once you live here that you would understand that a water company actually is a growth company. But I really appreciate the explanation. So we covered small and mid. What about FOL? Is there an FOL stock that you want to highlight to us as well?
This year, I talk about ACB as a bank. So ACB is one of the highest conviction forum names in our portfolio, even during the COVID-19. It's just a mid-sized private bank, but it has a very prudent risk management and also strong foothold in retail lending. So ACB is actually among the top 3 full name stocks that have the highest premium among the foreigners in the market. But we accumulated the stock at just as market price, and ACB returned 28% year to date. Is the top contributor to the fund's return.
So in this environment, and I heard a lot about ACB as well. In an environment for banking where there's bad debts, bad loans, what about ACB, kind of made you decide to invest even more in them this year?
As I just mentioned, the bank has applied a conservative lending approach, which resulted in their strong asset quality. So if you and other people perceive Vietcombank, the largest state-owned banks in Vietnam, as a best bank in terms of the asset quality, I believe ACB is the star amongst the private banks group because it has the lowest NPL ratio and also the second highest loan loss coverage ratio among the sectors. And so I think it will have lower risk in bad debts when comparing to the other banks at the same size.
Okay. So as we think about it from a conservative portfolio, conservative management, what about the growth potential?
While at low risk, I think ACB also have room to grow. Looking at the past, we see that they achieve an average credit growth of 17% and the pre-provision earnings growth 25% in the last 4 years. But they have more room to capture the growth of the retail banking sector in Vietnam, given their high capital adequacy ratio of 11% and also a low loan-to-deposit ratio of 86%. The bank also has the upside from the bancassurance business because they have been working to partnership with a large insurance brand. In terms of valuation, the bank trade at next year P/book ratio of only 1.2 times. This is a reasonable valuation when comparing to sector average of 1.5 P/book, and also based on its high ROE of 21% for the next year.
Well, terrific. Well, I really appreciate that the answers, and specifically kind of the examples of a small bid of an FOL stock. So again, VAF has a very unique structure of being able to buy a local portfolio and get access to FOL stocks without paying a premium. So that was great. Now, Tu, I'm going to turn it back to you for a couple of questions. So we covered the solutions that we can offer for international investors on the equity side. There's two things that you mentioned in your opening comments, but we didn't really go much into. And that's the ETF and fixed income opportunities. On the ETF side, why did we launch the ETF? And then what is unique about our VN100 in terms of how we believe we can help investors?
The ETF is actually our latest addition to our product suite. So traditionally, we've been only actively managing our funds, but recognizing that there are certain investors that have a need for this passive solution, we've decided to launch an ETF. And while doing the product research on which index to track, we actually realized that there is a gap in the market for a broader index, because at that time, the two ETFs were focusing on the VN30 and the VNX 50. And the reason why we chose this VN100 index is because we believe that it's a much broader index, and then it also provides exposure to a wider range of sectors, and more importantly, it has the potential to capture or to provide the best proxy to the market as the market grows bigger and deeper, as we discussed earlier.
That's terrific. And then as it relates, just actually before that, I'll just make one comment about the ETF. I think as an exposure standpoint, I think we get about 89% exposure of the VN100, of the VN index, and we get 95% exposure of the VN100 index. So, one of the things that we're very proud of when we launched is it does give you the best representation of the broader market as well. So
while having a very low tracking error.
Yeah, we target a tracking error of around 50 basis points. Thank you, Tu. So as we think about fixed income, historically we've sold fixed income more to domestic investors, but in an environment where rates around the world are at zero or almost negative, interest rates here, maybe make a couple of comments about where they are today, where they're going, and how people, if they have a more of an unconstrained risk appetite, might be able to take advantage of this.
Sure. The fixed income market in Vietnam, while still very, very small, has been growing rapidly in the last 5 years. And most of that growth actually comes from the corporate bonds sector, where the government bonds has stayed more or less stable at around 28% of GDP. But corporate bonds has now grown to 13% of GDP. And we are now seeing more diversified investor base as well as issuer base. The opportunities do truly exist in corporate bonds because government bonds yields are now at all-time low, while the corporate bonds spread over the government bond has actually widened significantly recently. And this is not due to a worsening of corporates' outlook or a higher default risk, but rather due to the excess liquidity within the banking system. To give you perspective, the corporate bonds that are typically around 1 to 3 years tenor are now offering yields of 8 to 12%. And in the context of a very stable currency, we think that this is a very attractive yield because you basically can look at it as a US dollar yield.
Yeah. So if you think about it, there's no rating. So if clients have a mandate where they can't go below AA or BBB, then it's a non-starter for them. But if they have a mandate where they want to get yield or they want to buy access to Vietnam in a different way, and they're not worried about a ratings agency, then it may be something for them to consider.
Yes, and also internally we do have our own credit rating system to help with our bond picking. We are selective in our bond investments because we have a fixed income fund that's the third largest in the market, in the domestic market, and we're also managing a segregated mandate in fixed income. So I think for investors who can look past the fact that Vietnam is below investment grade and would like to have exposure to the very high yield, attractive basically corporate bonds in Vietnam, we can surely provide a tailor-made solution to them.
Sure. Well, thank you. Well, everybody, thank you so much. We are going to grab one more stool, and then we're going to invite our head of research, Ismail, back here for some Q&A with the team. So if you haven't already, if you have questions, you can enter them into the chat function. With that, Ismail, please come on up. So Ismail, welcome back to the stage here. And so we are going to start our Q&A. And I do see that a couple of questions have come in. But before we get there, just to make sure that more questions are coming in, let me just ask a question that I would anticipate. All of our slides were through September 30th. It was just an easy way to keep things consistent. But I'm sure people are wondering, hey, how have you done in October, particularly the last couple of days? Were actually quite volatile. So Tao, over to you. How'd you fare in October? And do you still have an outperformance versus the benchmark?
Yes. So in October, as of yesterday, the 28th of the month, the fund returned 1.9%. And for year to date, the fund returned 2.1%, while the index is still down 4.2%.
All right, so still down 4.2%. And how about the fund for VAF?
VAF returned 2.8% year to date, while market declined 4.2%.
And you know, we were prepping for this yesterday. We were of course joking about the market volatility because the numbers would have been probably almost 2% higher had the markets not done what they've done. So you know, interesting. So I want to go to a question that just came in from Daryl. He talks about appreciating our disciplined approach. His question is for you, Tao, which is understanding the underperformance during the liquidity-driven market. If and when Vietnam gets moved from frontier to emerging markets, and maybe there's a resumption in SOE divestments suggesting more of a liquidity-driven market, will you adjust your investment approach to capitalize on what may be another liquidity-driven market?
I think we still stick to our fundamental bottom-up stock picking approach. But in the meantime, we are mindful of the liquidity. So we are looking at large cap quality names, but still have to be traded at reasonable price for us to include it in our portfolio. So that's our philosophy. And we think some large cap, because of their strong defensible brand name, they can deserve a certain premium versus other smaller companies. But at the end of the day, valuation still ultimate for us in a portfolio.
Maybe I'll just add something. In our observation analysis of similar upgrades in other markets, like the Eastern European markets, for instance, we saw that in the period of 1 to 2 years before the upgrade or anticipated upgrade, the market would be moving up in a very significant way. And then it's possible or almost very common that upon the upgrade, the markets would be adjusted downward, you know, up on the rumors and down on the news, right?
Yeah, well, and it's a common thing.
So, so we basically will be mindful of that in our in adjusting our strategy if necessary to capitalize on, you know, to best capitalize on that trend that we've observed in other markets.
Terrific, and now I realize that Ismail is directly in view of the screen where I'm looking at questions, and so Fung, this looks like this is a question for you. Someone must know the portfolios. They're saying you sold Mobile World, which apparently everybody else loves. Why'd you sell it, and is there a risk getting back in?
Yeah, so we admit that Mobile always trade at a very high premium, so 30 to 40% on average. But the partial exit of the Mobile World in March shows that we disciplined to our investment criteria at that time. And it shows that VAF has the flexibility of the enter and exit. So we exit the stock when we feel that we know that the outlook was not so great. And then we can re-enter at any time we feel that the business condition is getting better. So for Mobile World at that time, I think we are concerned of the discretionary spending that make the sales decline around 30% during April. And also we understand that the premium on Mobile World is because of the new grocery business. And at that time, as per discussion with the management, we saw that the progress is kind of under expectation. So that's why we decided to sell. But for me, I think in the longer term, we still appreciate the stock because of the excellent management in execution. And also we will closely monitor the grocery business for any update and maybe re-enter or increase the weight in appropriate time.
Thank you. And I think, you know, for folks who see the sale of Mobile World, if they're familiar with VAF or if they're not, you know, VAF and Phil has the ability to enter into full FOL stocks without paying a premium. And so for her, she can look at it like any other security, which is actually why we created that fund. Looking at another question, this one kind of an easy one, so I'll take it. What is the overlap between VAF, Phil's portfolio, and VVF, Tao's portfolio? Through the end of September, it's 23%. So we would encourage you to buy both in size, just if you're curious. So 23%, and based on you know, more small cap exposure, full room FOL, it's traded high where overlap has increased closer to 30 sometimes the 20s. But generally, they are very different portfolios. So that 23 is a little bit on the lower range, but that's kind of to be expected. Here's a question about privatization, so too, be prepared. You had mentioned in your comments that SOEs and privatizations or divestments were okay a few years ago, but some people were disappointed. Is there a reason for more optimism in the near term?
Yes, and I would repeat what our chief economist has said in his session, that the privatization would be much driven by the need for capital funding for the public spending in infrastructure. And he made a good point that I think for the time being, when the government is not too pressurized, because they still have the cash coffer for it, then the speed doesn't need, you know, to be a big high priority like in the past. But in the future, when that cash runs out and when the need to build more infrastructure, as it's currently a bottleneck for the inflow of FDI, the government would need to re-accelerate the process of privatization and SOE's listing.
Okay, terrific. And so another question that's coming in here, let's see, actually there's a comment that says the sound is not that good. So hopefully the folks can see if the sound is good. But the question is, what are the investments that we're making today in technology? So for that, you would actually talk about one of your themes was digitalization, which I didn't say very well, but you know what I meant. So maybe make a comment on that.
Okay, in terms of technology sector, it is not very well represented in Vietnam's listed market because just one or two companies there. So we will describe about our theme digitalization more in details with two representatives, that FPT Corporation and Viettel Post. Because as you already know, COVID-19 accelerated the move to online trend. So according to the recent report of iPrice, which is the e-commerce ranking website in Southeast Asia, the number of visits to online shopping platform in Vietnam increased 43% in the first half of this year. So, and in terms of the absolute number of visits, Vietnam ranked third, just behind Indonesia and Thailand. So Viettel Post, as a service provider in e-commerce delivery and logistics, can benefit from this trend because of its competitive advantages within the ecosystem of Viettel Group, as well as its technology initiatives in automation, e-fulfillment, and smart warehouses. As for the software part, FPT is the software company in Vietnam, the largest one. And because COVID-19 also helped increase the demand for digital transformation, such as cloud services. So the contract side, new contract side for FPT in the first 9 months of this year increased 22%. and the contribution from digital transformation increased to 28% in their software revenue from just 20% a year ago.
Yeah, so it's funny. So you talk about this, and it makes sense because one of the key themes that I think both of you and you talked about is, as we look at, particularly during this pandemic, is what are the companies, whether it's a theme or particularly the companies, are going to emerge stronger, not just emerge, but actually emerge stronger. And I think both of those companies sounds like their market shares and revenues have increased. Another question that came in is about small caps, and so this is interesting. I'm not sure who should take this. So are there specific challenges in investing in small caps in Vietnam? And I'm assuming it's probably liquidity related, and how do we work through that? Okay.
Yeah, as my fund focus on smaller companies, I will take these questions. To me, some challenges in pursuing the small caps investment is also, but it's also the opportunity for us. They are not widely covered by the large sell side houses, so it requires more active in sourcing the deals and working closely with our in-house research team. And also the liquidity is also the one challenge for us. So sometimes when the flows come into market, there are often the large cap stocks will perform first, and so that leave the small cap stock undervalued for longer time. So that's why it's a kind of challenge, but it's also our opportunity because it's a rewarding return after all if we are being the first mover. And also another challenge I think is the corporate governance issues, but being the one of the minority shareholder, we take the opportunity sometimes to advise the smaller companies in our portfolio for them to improve the corporate governance, transparency, and that way their value will be unlocked and market will perceive them better.
It's similar where you see in many asset classes is the more inefficient the asset class is, the more opportunity there is to actually generate alpha. So looking at the index or looking at the big basket of companies is not the right way to do it, but you're picking individual companies. So yeah. But you may have to wait, but eventually you'll get rewarded.
Yes, yes.
Okay.
So that's what I do with the fund right now.
All right, well, Ismail, I don't want to leave you all by yourself. So fortunately, a question came in that looks like it's directed to you, which is, are the banks appropriately capitalized?
Sure, this question is probably more pertinent at the turn of, I guess, 2020. This is due in large part because of the Basel II adoption that the sector is going through. Nowadays, you take a look at the banks, especially the ones that we cover, and they've all met the minimum 8% floor. The question is this enough? We actually think that they need buffer for prudential measures as well as for growth purposes. And 2% seems like a nice, safe number, a line in the sand, if you want to call it. And some banks are actually over that. But certainly, there's still a few banks that are below 10%. And the way we estimate this, at least for the 11 banks we have under our coverage, is that for every 1% increase that the banks have to do in terms of their total CAR would translate to about 50 trillion VND, or I guess roughly $2 billion for every 1%. At the moment, it's not a pressing issue, but certainly it's something we want to keep an eye on. The other thing to note, of course, is the whole world has transitioned to Basel III for the most part. In fact, they were talking about 3.5 or even Basel IV. But I think in the context of Vietnam, Basel II is appropriate in the sense that the banks are probably going to be needed to shore up the growth for the economy. As you know, for emerging markets, banks go hand in hand with the economy. And I think they've had an instrumental part in the fact that the country has been growing 6 to 7%, and we hope that will continue.
Thank you, sir. And then here's two questions about FOL. I thought we would get there eventually. I'm not sure who this one goes to, but probably wrong, which is, are FOL premiums higher or lower than they were 3 years ago?
You're asking about valuation or the premiums?
The premiums.
Okay. from 2017 to 2019, the premium kind of remained the same for each stock groups. But in 2020, because of the COVID, so the foreigners actually, with the need of restructuring their portfolio, some of the stocks premiums are getting smaller, especially the banks, which trade at 7% premium before, now just trade at 2 to 3% or even on the market price. But for the top holdings of VAF, to mention a few names like FPT, Mobile World or ACB, they still trade at a good premium, especially FPT and Mobile World. So FPT around 15% and Mobile World 30 to 40%. Yeah.
So you also follow up because you volunteered, I think, which is what about valuations? So how about valuations of FOL stocks on kind of a 3-year basis, and maybe you can buy small and mid and you can buy FOL. Do the valuations of FOL make you lean towards them or lean away from them?
So when we look at the valuation of the stocks, we will look in the valuation in relation to their earnings growth and also the return on equity. Also look at the valuation in relation to the market valuation. So we'll name a few like FPT. We know when we invested in 2017, they are trade at PE of 11 to 12 times. And at that time, the earnings growth of 15%. But now they trade at 9 to 10 times forward, and they still can achieve an even higher growth at 25%. So in this case, it shows that FPT is now even more attractive than it was before. For the case of ACB, it's also the case. When in 2017, they trade at P book of 2 times, and ROE at that time 14%. But now they can earn an ROE of 20% and traded P book of 1.2% forward. So so in conclusion, I think the top holdings of FOL in our portfolio are now more attractive than we when we set up the fund.
Right. So for me to ask the question, or for the question to come in, it's less about the overall universe. It's more about the specific stocks that you're looking at. Okay. Yeah. All right. There's a follow-up. So the question is, so are you saying VAF is more compelling now than we set it up 3 years ago?
Yes, of course.
Okay.
Holdings look more attractive in valuation.
Yes or no?
Yeah.
Yes.
Yes.
All right. So another question came in. Well, someone must have been paying attention because they're asking about fixed income. So can we talk more about the growth of the corporate bond market, and are we going to see a proper exchange and or ratings agency?
Yes, I pointed out in my answer to you earlier that I think one of the risks of investing in fixed income in Vietnam is the fact that there are no proper ratings. But right now we are seeing that a few local players have already applied for a license to be a rating agency in Vietnam for bonds. So we see that all this changing landscape is happening before us. The proper exchange, yes, in the future, the 2 exchanges, Hanoi and Ho Chi Minh, would be merged, and Ho Chi Minh would be designated as the exchange for equity, while Hanoi will be made the exchange for bonds. Actually, the bonds are already now listed on the Hanoi exchange, but it's just the merger would make things clearer in the future. In terms of the size growth,
do you have a likelihood of that happening?
Yes, I think that it's part of the NVIDIA mechanism that we're discussing, because in order for NVIDIA to be launched, the exchanges would need to be merged, and then the NVIDIA company would need to be formed under the exchange for equities. So everything is already lined up.
Excellent.
Yeah. In terms of the size of the bond market, as I pointed out to you earlier, the growth is in the bond market is mostly comes from the corporate bond sector. So currently, they stand at over $40 billion in terms of the size, and that's over 13% of GDP. And we see the growth to continue in the future years because the issuers, the corporates, are still in huge needs of capital for expansion. After this, I mean, this year actually has been challenging because there's been a lot of delays in expanding capacity and so on. And also a lot of real estate projects are being put on hold. But next year, when things become normalized somewhat, as we expect, then we'll see more issuers come to the market. And as I pointed out earlier, the market is now becoming very attractive, not only for the issuers as a way to access capital, but also for the investors to find, high-yielding assets to hide in this period of low interest rate environment. So yes, the answer is very definite. It's going to grow.
And when we say low interest rate environment, we need to make sure we put this in relative terms. No, I mean, in the rest of the world, rates are at 50 basis points or zero, and here in Vietnam, a 12-month deposit rate is probably still 6.5, but down from close to 9. Yes. And so there's certainly individual investors and institutions that used to keep assets in banks or term deposits, and they're now looking for alternative solutions. Okay, another question's coming in, more questions about liquidity, which makes sense. So Tao, we haven't talked to you in a while, so we'll come to you. So are there, this is a fair question in general, so as a portfolio manager, are there compromises that you're forced to make because of liquidity?
The portfolio consists of a nice mix of quality large cap, trading at reasonable price, and value fast-growing mid caps. So in fact, if we have to liquidate the fund, so the 90% of the portfolio can be sold within a matter of days, such as 5 business days. So I think we can combine the mixture of liquidity and quality in the portfolio.
And then a question came in, and I'll put this one to you, Ismail. Just overall, she talked about valuations of FOL. Could you make a couple of comments just about valuations on the market? I think earlier, I'll just redirect to one of your slides in the beginning of the day. You kind of highlighted where I think our PE was at 16 maybe? 16, and then next year 13. Where are we in kind of be more kind of forward-looking, and then are there certain areas that you would kind of lean towards, not thematically, but by sector?
Sure. I mean, if we look at the valuations today on 2020 forecasts, Vietnam is actually cheaper than the ASEAN average, which is standing at 20 times PE. But we're already in November for the most part, and we should be focusing on 2021. And next year's valuations do come down to about 13 times PE. That is in line with our historical average of forward numbers. And it's still going to be cheaper than most of the ASEAN markets, save for Singapore. Backing that up is also the fact that we're not seeing a steep earnings contraction this year, and yet we're still seeing a healthy rebound to about 28–29% in terms of EPS growth. That's within striking range of the 30 to 35% EPS bounce we're expecting for ASEAN markets. But you should be mindful that they're coming off a bigger contraction, as deep as 40% for some markets. And so they're coming off a bigger low base effect. I think there is attraction in Vietnam. There's a stronger structural and secular growth appeal. And I believe investors will see through that. And we're already seeing that the fact that average daily turnover has now been rising, some days over $300 million per day.
Now, I'll follow up. So foreshadowing my closing comments, because Ismail's going to be back on day 4 to talk about financials. Are there any sectors in particular that you think are a little bit more attractive?
Certainly the ones we look at that are in single digits would be the first port of call. And material sector is one that's still trading on single digits. Utilities is another. On the extreme end, of course, that spectrum, you do have aviation and oil and gas. And I think that's a natural reaction to the fact that there's no tourists, there's no flights, and oil and gas prices have collapsed. In fact, you can say that's a second black swan. So I think opportunities are still there in terms of value. Within our own coverage, we actually do find a lot of names that are trading well below the market average. And again, we would emphasize that we do cover probably the highest number of stocks in the market at the moment.
It's funny that echoes a theme that I think we see globally, which is this year, the market average may be X, but there's really a huge disparity between the winners and the losers, and so sometimes the averages mask that. A question just came in about the last couple of days, so Tu, I'll put this to you. We've seen the U.S. Sell off significantly in the last couple of days. We've seen the increase in cases globally. We've seen, I guess, lockdowns announced in France, in Germany, I think, and other countries. I'm probably leaving some countries out. And the Vietnam market sold off the last couple of days as well. What's your perspective on if we'll trade in tandem, and will we get a reprieve?
I think the last few days of the Vietnam market has shown that we are growing. Our correlation with other markets has been growing. In fact, the last few months, our strong market was also helped by the fact that the US market was very strong. So in August, Vietnam was the best performing market in the world. But today, over the last 4 days, the market is down about 5%. That's almost in tandem with the US market. But I think that if we look at the bigger picture, which is that I think the Vietnam market investors are a little bit vulnerable because they are most of them are trading-oriented investors. We think if we look past that, the fact is that the economy is still very strong, and the third wave, if it happens elsewhere or even in Vietnam, I think the government has a good way to tackle it, and they have demonstrated that the first and second wave were very well managed. We are, however, mindful that there will continue to be volatilities in the market, not only in Vietnam, but elsewhere in the world, that may affect the Vietnamese investors' sentiment. And actually, in all those instances, as we've done in the past, those instances would actually present us with opportunities to pick up good companies on the chip.
Yeah, in fact, I don't know if it's been published, so I'll say it and hopefully not get in trouble, but our chief economist, Michael Kokolari, sent out a piece this morning saying, given U.S. volatility, U.S. election, U.S. potentially could sell off a little bit, and if Vietnam does sell off in tandem, it would absolutely be a buying opportunity for Vietnam. So, again, the manager in Vietnam bullish on Vietnam, but still, if it does get cheaper, in this case, absolutely buy on the dip. Well, that brings us basically to a close. I want to say a couple closing comments. So number one, thank you very much for joining us. To Tao and Fung and Tu and Ismail, thank you so much. There will be a replay. I guess if I'm saying this, I'll just say it anyway. There will be a replay online. If you have colleagues that were not able to dial in, please let them know. And next Thursday at the exact same time will be day 4, our final session. And there we're going to feature 4 of our leaders from different sectors. We're going to have Ismail talking about financials, which is really on the public side. And then we're going to have 3 of our senior investors from our alternatives platform. We're going to be talking about technology, our clean energy platform, as well as real estate. So it'll be a little bit different in terms of the actual betas, but it'll be pretty interesting insight into other ways that we can help you invest inside of Vietnam. So again, thank you very much for your attention today, and hopefully we'll see you next week. Thank you very much.